Hello, welcome to Ugbs 208, Introduction to Financial Accounting. As you may be aware, this will be the final introductory course for all business students in accounting. Now, I am Kujua PJ, and I'll be taking you through this course with my colleague, Augustine Donko. Now, you should know that a very good understanding of the topics or the various sessions in this course will depend on how well we're able to understand the previous accounting course, which is Fundamentals of Accounting Methods. Now, at this stage, what we'll be doing is to learn how to prepare financial statements for different types of business organizations. So today we're going to consider departmental accounting. Then for other sessions, we'll look at manufacturing partnership and all the others. Okay. So to begin with, you need to be aware that as trading organizations begin to enlarge, it may sometimes be very convenient for them to separate their various activities into separate departments. Now, this would help the organization determine the performance of each department as well as the performance of every manager that is in charge of a particular department. So this session, we're going to consider departmental accounting, and at the end, we expect that you'll be able to identify the advantages of keeping departmental records, learn how to allocate direct expenses and apportion common expenses associated with departments, and finally prepare departmental income statements for the purpose of decision making. Okay. Now, it is interesting to note that this course will require you to get some reading list, which includes Mafuyado, Masanti, and Taki, as well as Frank Woods and Sangster. Although when we get to some sessions, we would introduce some other reading materials. So we hope that you consult your course guide and find the reading list which is required for you to get for the purpose of our discussion. Okay. Now, let us start. Let's ask ourselves, what is departmental accounting? In brief, when accountants try to provide accounting information for an organization which has been divided into separate departments, such that each department is being treated as a separate unit, that is all that departmental accounting entails. Now, one would ask, why is it necessary to even have departmental accounts? Yes, first of all, it becomes very easy for you to evaluate performance of each department, as well as the performance of each manager. In addition, you would be able to evaluate the growth potential of every department. Now, as an entrepreneur, you wouldn't want to invest your money where you are not going to get any form of returns. Hence, anytime you want to undertake an investment, you need to justify the reason for a particular capital outlay. Having or preparing departmental accounts will ensure that managers of an organization take decisions which is based on accounting information. Now again, departmental accounts can help evaluate efficiency of a department, as well as it could help in identifying successful managers. Now sometimes if you want to decide whether to shut down a particular unit, there's the need for you to do so based on accounting information. And shutting down of a particular department should be based on accounting information which we are sure by preparing departmental accounts you'll be able to have. Okay. There are basically two methods for keeping departmental records. You can decide to keep separate books for each department, or have a single set of books for all departments, but you're going to keep the records in a columnar form. Allocation and apportionment of expenses. There are some expenses which can be traced directly to a particular department. Now, for which reason it becomes very easy. For example, the salary of workers working in the shoe department can easily be traced as an expense to the shoe department. Then, the salary for laborers in a construction unit of an organization can easily be traced to that particular department. So when expenses can be related to a particular or specific department, we allocate all of that expense to that particular department. However, there are some expenses which relate to more than one department. For example, the rent of a shop. Now, if you have a shop and the shop is used to run the business of various departments, then we cannot allocate the entire rent of that particular shop to one department. For that matter, we would learn how to apportion such expenses. Then, for expenses which cannot be allocated or apportioned reasonably, all these expenses would have to be recorded in the combined section of our income statement when we begin to report for each department. Okay. In apportioned expenses, you need to come up with a reasonable basis. Beware, we are using reasonable because the basis of apportionment for one organization may not be the same for other organizations. But as accountants, we believe that there should be some reasonable basis for sharing common expenses among various departments. For example, if you pick the sales of each department, the salesman salary, salesman commission, selling expenses, discount allowed, advertisement, etc., could be expenses that could be shared based on the sales of every department. I hope you'll be able to come up with common basis or reasonable basis for sharing expenses when you go into your various organizations and you start practicing as financial accountants. Okay. The departmental account could be presented as shown on your slide. So an organization that operates two departments could have, for the purpose of preparing the income statement, could have a column for each department and the last column, which is the combined or the total, for you to see the overall performance of the entire organization. Now, it is prepared using the same principle that you learned in your last session for Ugbs 205. That's preparing financial statements for business organizations. So you have your sales, your returns, and all the other things that we considered in our previous discussion. Now, the only difference when we come to departmental accounts is that we want to determine the profit or loss for each department before we determine the overall profit for the entire organization, in order to help us in making decisions for each department and for the organization as a whole. When it comes to the statement of financial position, you should know that the organization could not divide or separate the assets among the various departments. For that matter, the statement of financial position will be presented for the entire organization without any division relating to a particular department. Okay. There are two types of departments. You could have an organization that runs a department which is independent of each other, meaning there's negligible interdepartmental transfers. This usually arises when the activities of the departments may not be related at all. But you could also have departments that are dependent on each other. In such a situation, there could be transfer of goods from one department to the other. For example, if you take an organization that has a sewing department and a textile department, it is possible that some of the raw material for sewing could come from the textile department. For that matter, you would usually see transfer of inventory from one department to the other. Now, issues which may arise as a result of the transfer may be because of the price at which the goods have been transferred, whether the goods are transferred at cost or at a selling price. If the goods are transferred at cost, then we have no problem at all, because it's simply a movement of inventory from one department to the other. But when the goods are transferred at a selling price, then we could have issues with provision for unrealized profit. Okay. Now, for that matter, once the organization is one big unit, but being operated under separate or distinct departments, now you should know that whenever there's a transfer of goods from one department to the other at a market price or at selling price, then the department that made the transfer would have made some gains, which would call profit from the transfer. However, it is the same organization, so you should look at it this way. If you cannot sell what you have in your right hand to the left hand and claim that you have a profit, the profit is notional, but that profit can only be realized when the goods that you transferred have been transferred to a third party. For that matter, so long as a portion of the goods transferred from one department to the other remain in inventory, then a portion of the profit arising from the transfer is unrealized. And these are some of the issues you should take into consideration when you are working with departmental accounts and there are transfer of goods at market values. Okay. Now, at this stage, we would like you to refer to question 1 in your assignment 1 for departmental accounts, Sakura stores. Then try your hands on how to prepare the departmental income statement as well as the statement of financial position for the entire organization. We do hope you find this exercise quite useful, and if you have any questions or challenges, you can contact us on our Sakai platform and we'll be available to help you. Thank you and see you soon.